Thanks, Bowen, and hello, everyone. My name's Jessica Amir. I'm a market strategist with Moomoo, and I've been in financial markets for 17 years. And I guess it's my job to share information that we're seeing and also, I guess, map out a path for where and how clients can earn more money. So we look at sectors that are likely to do well based on government tailwinds, also what's going on in the macroeconomic environment, and then we also look at stocks that are likely to do well. And because we've been doing this for such a long time now, we've become, I guess, a household name in media. So we appear, I guess, in US TV and on Australian radio, and also some TV shows in Australia as well. So we're a regular on Fox News, on Reuters, and on Dubai's most watched radio show and TV network as well. So yeah, we're here hopefully to help you make some good financial decisions and help you get one up on Wall Street. Thanks, Bowen.
Thank you, Jessica. Jessica is very professional and very eager to help our dear investors. She's always explaining the latest investment events and the macro policies in our Moomoo community, and which are so welcomed by our Mooers. And if you are new to our Moomoo, please search and follow Jessica Amir in our Moomoo community. You will definitely not regret it. And today we will be discussing the market trends and investing strategies related to AI, artificial intelligence. And today is really about learning and sharing together. So, movers, please type in the chat box whenever you are tuning in and discuss the topic with us. And at the Q&A session, Jessica will help to answer these questions. Also, we have prepared some surprise quizzes and points reward. About the points reward, we have a detailed explanation of what it is and how to use it at the announcement. Sorry. Please confirm the details of the information so that you can better use the points. And now, let's test it. Are you ready to join the exciting webinar? If you're ready, please type 1 in the chat box to get 5 points. Wow, I can see that chat box is buzzing with one and I can feel the excitement building up. Without further awaiting, let's hop into today's topic. So, AI is one of the top themes for investors in recent years. The rise of generative AI has driven advancements in various technology and industries like chips, cloud computing, and software applications. As we are in 2024, many investors wonder if there are still opportunities in AI. Have we missed the boat? So, Jessica, how do you think so? Do we miss the boat of AI?
That's a great question, and we get asked that a lot by various journalists on television, radio, and in newspapers. And some of our clients ask us that as well. And we say, no, you haven't missed the boat. In fact, you could argue, and it's been said by, I guess, the World Economic Forum, also by NVIDIA's CEO, Jensen Huang himself, the AI megatrend is just at the tip of the iceberg. So I guess that's what we'll be uncovering today, Bowen.
Okay, thank you so much. So, sorry, give me a second. Okay, so why do you think we didn't miss the boat? Can you give us some more reasons? And can you also name some leading AI companies for us?
Sure. So what I'll just do is take you through a couple of slides that we've prepared. But first and foremost, I just want to, sorry, pardon me, just go back. And sorry, this thing is so sensitive. Sorry. So everything that you hear today is general in nature, and we're not going to give you advice so you can make billions of dollars. Everything is general in nature, and if you are seeking financial advice, you do need to seek, I guess, a professional who has analysed your assets and liabilities before they actually give you advice. So in terms of why we haven't, I guess, seen the end of this mega trend. And it's not just us saying this, but we do know that AI is a part of the fourth industrial revolution. And this is according to the World Economic Forum. And so I guess we're about to see a brand new chapter of technology that we've never seen ever before. And if you listen to Tesla's CEO, Elon Musk, yesterday at the 24th Milken Conference, he backed that up as well. Again, saying that AI is at the tip of the iceberg. We haven't even seen humanoid robots, I guess, become mainstreamed. And we haven't yet seen, I guess, flying cars, which is something that maybe our generation won't see. But maybe our children or our grandkids will. We also know that Jensen Huang again said that AI penetration is at the tip of the iceberg. We know so Jensen Huang is NVIDIA's CEO. We also know that he has said that humanoids will be, I guess, the future. And AI chip demand is currently from data centers. But what happens when AI chips go into our smartphones and everyday devices like our laptops? And this is the next leg of growth that we're probably going to see, Bowen. If we think about the dollars and the cents, so we've highlighted on the slide here, we can see that the AI generative industry is projected to hit $1.3 trillion. That's just extraordinary. And I guess at the backbone of this, we do have, I guess, the tech companies that are investing billions of dollars. So the Magnificent Seven, which we speak a lot about on Moomoo, they've been investing and are mapping out to spend billions of dollars over the next several years. In fact, many of the Mag 7 just recently announced that in this quarter's results. But if we think about the chip market alone, so who are the beneficiaries of that? So you've got Taiwan Semiconductor, a TSMC, NVIDIA. They're in this market down the bottom that we can see that we've highlighted, that's projected to grow from $0, which is what it was in 2022, would you believe, up to $400 billion. So there'll be some of the beneficiaries of that. So that's just the tip of the iceberg, really. Just really, I guess, getting you thinking about why this big thematic is not over. So this is some analysis done by Bloomberg now. It looks overwhelming, but I just want you to focus on a couple things for me. First of all, let's think about when you are looking to buy a company, we have to remember that earnings drives share price growth. And when a company gets an earnings upgrade, who can remember a company that recently upgraded their earnings? Well, we have a couple. We had Tesla and we also had Apple saying they expect earnings to grow throughout the year. And as a result, their shares rallied. On the left, we can see that AI, this is according to Bloomberg, is expected to be driving earnings growth, which is good for shares, and also earnings upgrades. And the sectors that we're looking at, the second thing that I want you to focus on here is, I'm not sure if you can see my mouse, but I'm highlighting where we're likely to see the most spending. So this is what's likely to drive revenue growth. So drug discovery, software and investment, AI, cyber security, and also in totality, overall IT services spending. So let's think about IT services spending now. So if you think about the company that you work for, maybe you're an employee of a company, or maybe you're self-employed, ask yourself, how much is being spent of my company budget on AI? The chances are it's probably zero, but the average company in the US spends 1% on generative AI. I'm talking the big companies, the S&P 500 now. So thinking about that, so if the average S&P 500 company is spending 1% of their budget on AI, think about what's going to happen in 10 years' time. That number or that portion of a company's budget allocated to AI is expected to grow to 10 to 12%. And as you can see, I've highlighted that here. Again, who are the companies that are going to benefit from this? They're the tech companies, the hardware companies, and also the cloud and semiconductor companies. Obviously, today we're on the cloud, and our computers are powered by chips. But then we've got to think about who are the mega tech hyperscalers behind this as well. And Bowen, that might answer your question. Who are the big companies that can benefit? So the mega tech hyperscalers, when I speak about those, think about the Mag 7 names. So Meta, you might be sitting on your phone. Maybe you're bored about what I'm saying. Maybe you're scrolling on Instagram. So Instagram being owned by, the Mag 7 company. Meta, that is also an example of a hyperscaler. And just rounding it out, we spoke a lot about gaming and cybersecurity. So there's a couple of companies in gaming and cybersecurity, or you can look at ETFs on the ASX, such as Hack, that are investing in some of the biggest gaming and cybersecurity companies. But all of this, Bowen, and everyone listening, all of this to grow AI can't be done without tech. So the chip companies, and also the cloud and data centers. And with that said, I'll hand back over to you, Bowen. That's a very long answer. Sorry. Hope that answers your questions.
That's fine. You are so amazing, and it's very insightful ideas. And we can know more about the macro trend, about the AI. You know that the trend is definitely, just as you said, it's a fourth industrial revolution. And I think all of our investors, all of our audience are eager to know what's the specific investment opportunities, what's the specific, AI stocks to watch or to invest in the future. So could you please also share us some, dig into the details of the specific stocks? And I know currently the AI trend is maybe in America, just as you said, NVIDIA is definitely the superstar now. And also for our audience, you can also share your AI companies you are now following our chat box so that you can win 50 points. And now is your time, Jessica. And so welcome for your opinions about what's the AI companies now.
Thanks, Bowen. And absolutely. As Bowen said, we welcome your questions. We'll be holding in-depth Q&A at the end. So we want to give you 15 minutes so that we can answer all of your questions that you have on AI tech and absolutely on chips. So let's just, I hope you don't mind, Bowen, I know you asked about ASX companies, but what I might start with is actually the leading companies that have been driving this AI mega trend. So we do know at the backbone of AI, we obviously can't have chips. So again, this slide might look a little bit overwhelming. Just bear with me. So here we have, if you think about the S&P 500, which is, again, the biggest 500 stocks in the US, and if we think about the NASDAQ 100, the biggest 100 tech stocks in the US, who are they and what has been generating the best share price performance? And here we have the top 13. Don't know what's happened there with ASML trying to jump out and say that they're so attractive, and they've ruined the formatting there. Apologies. Let's just focus on the top three. So here we've got Supermicro Computer. We do know that their shares have gone up 192% this year. But just ask yourself, is this AI server computer company able to sustain this growth? And I think this is what Wall Street or the average analyst is now asking. And the reason that we're thinking about this and asking this, not just myself, but also consensus. And when we talk about consensus, remember, at Moomoo, what is consensus? When we're talking about consensus, whether you're reading some of the research that the team have written in the news team or analysis team or what is consensus? It's the average analyst estimate. So the average analyst is a little bit skeptical on Supermicro's computers shares moving substantially high over the next 12 months. Why? Well, sure, they do partner with NVIDIA, as in their AI servers actually use NVIDIA chips, and then they'll send them out to customers. So we do know that Supermicro is paying NVIDIA for their chips. So again, that's something to think about. Supermicro is paying NVIDIA for their chips. So as I've highlighted here, their customers are not concentrated. And to me, when I'm looking for a company to invest in, I like to see diversification of revenue, but I also like to see that their customers are large customers and are buying a large amount of their product. And to me, I guess this is what is a concern for me, and also for consensus, the average analyst estimate. Again, you're not really seeing that transparency of how they derive their revenue. If we think about NVIDIA, the second best performer in the S&P 500 and the NASDAQ, their shares are up 86%. Sure, their shares are up a lot higher before, but we do have a couple of catalysts to look out for with NVIDIA's shares, or rather their earnings report expected to be released, as we've highlighted here, on May 22nd. Let's just go back to NVIDIA here. I've highlighted that they are the AI chip leader. Yes, they are. Make no mistake about that. Why do we say that? And why, if you type that into Google, why are they the chip leader? As I've highlighted here, or as we've highlighted here, 40% of NVIDIA's revenue, guess what? It comes from the Mag 7. So this is pretty compelling to me. And when I'm looking at a stock myself, this is the type of company that I like to invest in. Something that is embedded with the biggest companies in the world, i.e. Microsoft, Meta, Amazon. They're paying NVIDIA for their chips, and Alphabet. And why am I saying that this is so attractive? Well, if you highlight, if I'm highlighting here, as we recently heard, I don't know if you remember, you can write it in the Q&A. Do you remember a couple of weeks back, I know things happen very quickly in markets, but do you remember a couple of weeks back at NVIDIA's GT conference? At their GTC conference, they actually highlighted that they've strengthened their collaboration, and Microsoft, Meta, Amazon, and Alphabet bought more of NVIDIA's AI chips, and all of them strengthen their collaborations. In fact, if we think about last week's earnings results and the week before from Microsoft, Meta, and Google, collectively, as we can see here, they've announced that they're going to spend $140 billion. That's $140 billion on AI, and that means they need to buy more chips. So that's something to think about. The third best performer in the AI and chip space is a server maker, another server maker. So when I'm thinking about server makers, so I've highlighted Supermicro here, but when I'm thinking about other server makers that I do like personally, and the Wall Street, the average analyst likes, we're liking Micron technology. Why? Again, they're concentrated to supplying their chips and getting a large amount of their revenue from the big end of town. This company, Micron, they're a bit more diversified. Their AI chips more so go into our everyday devices, very different to NVIDIA. So if you are looking at buying NVIDIA, for example, you're buying Micron technology for another reason. And the reason is this. So Micron Technologies AI servers, so their chips, their AI chips, go into Apple, some Apple devices, some Apple, I'm not just talking about smartphones, also the Apple Mac, etc. Then you think about Dell, Lenovo, LG, HP, and also Intel PCs themselves. So believe it or not, a lot of those businesses, or those businesses, make up 23% of Micron's revenue. So a lot of detail, but I guess this is a catalyst for you to think about when you are looking at a company. Do I want to be investing in this company that's getting the majority of their money from these tech leaders? So what are some other catalysts that could cause this entire AI and semiconductor space to, I guess, rally up and get more of a sentiment boost? Well, aside from $140 billion being spent that was just announced in some AI and chip leaders, we do have NVIDIA results coming up. And I encourage you to mark that down in your diary. Use Moomoo's Earnings Hub. Book NVIDIA's results into your calendar using our Earnings Hub and keep track of their results. And remember this, as we've highlighted here, NVIDIA shares have historically jumped 14% after they've released results. What does that tell us? NVIDIA's got a history of delivering pretty good results. Also look out for Apple's developer conference. They're going to be mapping out their new leap into AI, which I guess they haven't really done before. Sure, they announced a new iPad overnight using an AI chip, which is great. But Apple's developer conference is one to watch. So too is Microsoft Builder Conference. So this is a lot of detail again, but just take away that we do have some hot stocks to watch in AI. So let's start with NVIDIA. So NVIDIA shares, as we said, they're up. Let's just focus on point one for now. NVIDIA shares are up 86%, but the market thinks that they could go to 966%. Sure, we do have some analysts, again, overnight, upgrading NVIDIA's shares with new price targets of $1,100. We'll get to NVIDIA in more detail on the next slide, but I just want to focus on Taiwan Semiconductor. Taiwan Semiconductor has got a secondary listing in the US, and that's why it wasn't listed on the prior slide. So Taiwan Semiconductor, you can buy their shares on Moomoo if that's what you want. What I like about Taiwan Semiconductor and what the average analyst likes about Taiwan Semiconductor is, number one, they are one of the world's leading manufacturers of semiconductors. They also do the design as well, but think of them as a contractor. So think about that. So that's why most of their clients include the chip makers that you can see here. Again, think about this company, but think about the long term as well. Also think about the US government awarding TSMC a $1 billion contract. So TSMC, I'll just read it out just to call it out so it's nice and clear. TSMC's clients include Qualcomm, AMD, NVIDIA, Broadcom. So again, there's some mega cap chip makers. Again, TSMC we think is one company to watch. But it's not just me saying this and consensus. Also, if you think about the second biggest ETF in the world that invests in AI chips or that you can buy to get exposure to AI chips, that's the ETF, as I put here, SMH. And guess what? Taiwan Semiconductor is the second biggest holding in this ETF. What does that mean? That means every single quarter, TSMC is going to see continuous buying from various superannuation funds around the world that are investing in this ETF. And that's something that you can explore if that's what you want as well. We've also highlighted that Micron Technology, AMD, Advanced Micro Devices, they're two other type of chip companies. So if we just think about Micron, who are they? We spoke about them on the prior slide. Micron shares are up 40% this year. They are expected to go a little bit higher if you think about consensus. But why you might be looking at this company, they're making the AI servers, and guess what? They're partnering with the big end of town as well. I know there's so many companies to think about, but there's always opportunities in markets. You just have to think if that resonates with your core values, and if that's something that you want to invest in for the long term. So Micron, who are their biggest customers? Well, we do know Apple, as we can see here, they use their AI server chips, also Dell, Lenovo, LG. So if you're buying this company, you're getting exposure to chips or a chip company that is powering our everyday devices. That's something to consider. AMD is another company that I guess has been maybe flying under the radar this year. Their shares have not done so well as the other chip makers. So guess what? Wall Street has increased their view that AMD shares will rally up this year. The average analyst is saying that their shares could get to $189 in a year. So why is this notion around? Well, number one, their shares were sold off on the back of disappointing results, but their forward earnings do look quite strong. Sure, they disappointed the average analyst, which is why their shares pulled back. But we do know that their forward-looking revenue is, I guess, bedded down by some of the world's biggest companies. Sony, this is another really interesting thing. Sony makes up 18% of AMD's revenue. So when you're buying AMD, you're effectively buying exposure to, again, a company that's supplying chips that go into maybe your headset, maybe also Dell computers as well. Also, Foxconn, we do know that Foxconn makes Apple's smartphone, and they're also buying AMD chips. And last but not least, we've spoken about Amazon a lot in the Moo community, but Amazon is actually touted to be a big AI player in years to come. Why? Well, they've just kicked off spending, or they've resumed spending of tech for the first time in a long time. And we do know a lot of companies, some companies are cutting spending, given US interest rates are quite high, but we do know that Amazon is looking quite attractive. I've covered a lot of detail, but I just want to leave you with NVIDIA before going off to something about exchange traded funds or ETFs. So this slide is very detailed about NVIDIA. What I want you to take away is three things, and I've kind of highlighted them in orange. So NVIDIA's revenue is expected to grow to $113 billion next year, and that'll be up from this year's $60 billion. We do know that, again, I spoke about forward orders. So forward orders are actually booked in for the H200 chip. And so when we speak about why is that revenue expected to grow, why does Wall Street tell us that their revenue is expected to grow? Well, they've rolled out a couple new products. They've rolled out the H200, which is 30% more expensive than their current chip. Remember, the H100, guys and girls, in case you didn't know, the H100 is actually the chip developed by NVIDIA that actually powers ChatGPT. And so when we think about the H200, who has bought the H200 that was rolled out from this quarter, and it's 30% more expensive than the H100? Well, Oracle, Microsoft, Meta, and Amazon, they've all bought the H200. Second of all, I want you to think about this. I spoke about AI demand not being at the tip of the iceberg. So the majority, as we can see, of NVIDIA's customers, the majority of their customers are IT companies. But what I want you to think about is, remember at NVIDIA's GTC conference, they announced 24 collaborations with healthcare companies. So this is a new revenue source. I'm not talking about 2025. We're talking about years to come. So this, I guess I would encourage you to think about NVIDIA if you are trading in it or investing in it this year, but think about potentially the catalyst for investing in a company like this for the long term. Think about this as well. Apple, the iPhone I guess, created Apple, the biggest company in the world. But what we want you to think about is, will NVIDIA's chips make this company the biggest company in the world in years to come? Especially thinking about the mega cap companies, the Mag 7, who are investing billions of dollars in this company. Then think about Novo Nordisk, Johnson & Johnson, and GE Healthcare. Their revenue streams aren't even on NVIDIA's balance sheet yet. But think about in the future, what will their NVIDIA's balance sheet look like? What will their revenue stream, how much can their revenue streams grow by? Last but not least, why on earth has NVIDIA's shares grown so hotly, and why has it become the third biggest company in the US? Well, it's because no other company in the world is growing this quick. No other company is seeing this revenue growth. And no other company is seeing revenue growth of 117% on an annualized basis. So that's something that I want you to think about. Last but not least, think about NVIDIA being the most held and the most bought chip company in the world. In fact, the world's biggest ETF companies, Vanguard, State Street, as we put down the bottom, they also hold very significant stakes in NVIDIA. So thinking about who is holding NVIDIA's shares and who is increasing to buy NVIDIA shares each quarter, well, it's the ETF providers. Also, ETFs like SOX and SMH, we do know they're the two world's biggest semiconductor ETFs, and NVIDIA is the #1 share and the biggest holding in those ETFs. This is a lot of information, but please write down your questions in the chat box and Bowen will get to those. Just one thing, if I can, Bowen, just quickly touch on this before we get to the ASX stocks, if that's okay.
Yep.
I want you to also think about this, ladies and gentlemen. So here we have the 5 biggest investments in the world, and these are ETFs. So we can see $425 billion of assets are in SPY. This is the world's biggest ETF. And you can buy that ETF, by the way, if you want, on Moomoo. And you're getting exposure to the S&P 500. But when we think about that, when we think about how much, I guess, the Mag 7 account for in these top 5 big investments, we can see here that Apple makes up 7% of the world's biggest ETF. The second biggest ETF in the world is IVV. We put that down here. Apple makes up 7% of that. Microsoft, 7% of that. NVIDIA, 3% of that. And so on and so forth. What I want you to take away is this. So $1.7 billion or $1.7 trillion, if you add up all of those, $1.7 trillion of exchange traded funds, a majority invested in tech companies. And the world's biggest tech companies are listed here. We've got Microsoft, Apple, NVIDIA, and Amazon. So what I want you to think about is this. If you think you've missed the boat, guess again. We've spoken about the catalyst, and then guess what? The world's biggest exchange traded funds with some of your money, if you have superannuation, are continuously buying into these companies every quarter. And that's something that I want you to think about. Bowen, sorry, very long answer, but I'll hand back to you.
Thank you, Jess. Wow, such a shiny stock list. Not only, ETFs and those brilliant names, NVIDIA, Macron, Microcomputer, and Amazon. Yeah, and just as we said, NVIDIA, the superstar, and we all know is now over $900. It's quite pricey. So, Jess, do you know how can we invest in EF trends or specifically in NVIDIA within our budget for more investors? Do you have any idea?
Yeah, that's a great question. So, well, I guess the first answer would be fractional shares, and we can show you how to do that. But what I also want you to think about is actually using Moomoo's search feature. So if you type in NVIDIA on Moomoo, you might see some other products pop up that also are NVIDIA. So we do have some leveraged ETFs that we've been speaking a lot about on NVIDIA. So if you type in NVD, if you're following on with me, you can see NVD X would be an example of how you can get exposure to NVIDIA if you have a long-term view, and bearing in mind this is a leveraged ETF. So NVDX on Moomoo, you can buy, instead of saying buying NVIDIA for $900, you could buy this ETF for $96. There's many other examples. If you want to go long NVIDIA, there's some leveraged ETFs that you can explore on Moomoo, or short, if you think NVIDIA may potentially pull back in the short term. There's some ETFs for that. But let's just cover fractional if we can, because this is quite new to Moomoo. So if you use your app on Moomoo, again, taking that notion, just using our search function at the top, you just type in NVIDIA's code as an example, up will come NVIDIA, and then you click on trade. And then after you click on trade, what I want you to do is actually change what we can see here, change the quantity to dollar amount. This might be easier for you to, I guess, do as opposed to entering a quantity and buying, say, 0.01 of a share. So if you type in the amount, then you can say how much of NVIDIA you want to buy. So we can see the next screen that will pop up here would be you just enter your dollar amount. I've put in $100. So I want to buy $100 of NVIDIA's shares. And as we can see, they were at $921. And this was the prior day, not last night. If you want, you can buy NVIDIA shares as little as $5. So yeah, there you go, Bowen.
Thank you. Very helpful and instructional. So, yeah, as we just said, many about maybe the American, about international shares. So maybe it's a time for us to move our eyes to ASX. So, Jess, could you also please help us to share some companies so that we can, invest domestically for our Aussies?
Yep, great question. So we do know that a lot of Australian clients do prefer to invest locally into companies that they can understand. But on Moomoo, what we found is that a lot of our clients are, I guess, chasing where the most forward growth is. And that's why we've seen on Moomoo a lot of clients buying those big stocks that we've been speaking about. But here we've got some of the ASX's, I guess, AI-related companies. And so all of them, I guess, if we have a look at the top 5 that are pegged to the AI theme, I guess we're speaking about mega caps. I haven't included BrainChip, by the way. BrainChip is an AI company, but it's not classified as I guess, as a mega cap in the ASX. So just thinking about some of the biggest AI companies, who do we have? So Megaport at the top. Megaport is a data center business. So Megaport, they get a lot of their revenue from Aussie broadband. So their shares have had a good run, as we've highlighted here. Their shares are up almost 60% this year to $14, but the market thinks that they could be a little bit overvalued now, only expecting their shares to grow up to $15. But if we think about NextDC, as we've highlighted here, this is a company that is making money not just from onshore businesses here in Australia, but NextDC's clients are also from abroad, ladies and gentlemen. So Alibaba, Accenture, Alphabet, and AT&T. The thing that's very different to ASX companies, remember how on the prior slides we actually could give the quantification or the amount of a business's revenue that was coming from a particular company. Remember we spoke about NVIDIA, 40% of their revenue is coming from Alphabet, Amazon, Meta, etc. But Australian companies, they're not as big and they're not as, I guess, unfortunately, at that level where they can give that type of transparency. Another company that's really interesting is Altium. So Altium makes circuit boards. And so Altium is actually another company here that was founded here in Australia that's working with offshore companies, including Tesla and Amazon and NVIDIA as well. So although their shares are only up by, I guess, 37%, the street, the average analyst is expecting a little bit more upside ahead. One that I know, a company that I know quite well, is Audinate. So Audinate is the fourth company that we've listed here. So their shares are only up 17% this year, but their shares continue to hit record all-time high after record all-time high. So who on earth is Audinate? So Audinate has become, I guess, one of the world's leading suppliers of, I guess, music-related AI systems. So essentially, think about this. I don't know if you've ever seen a TV truck on the side of the road. So if you think about you're at a concert maybe, you think about that truck that's sitting on the side of the road, and there might be televising that concert to, I guess, Norway or Sweden, or putting it on the internet and live streaming it just like we are now. So that on the music industry, that backbone of that is powered by Audinate systems. So it's not just music companies that are using Audinate services for festivals, but it's also companies using Audinate into their software as well. So we've put Bose, Roland, Sony, Yamaha. There's some of the high-end names that are working with Audinate. Last but very not least, Bowen, we've put down Pro Medicus. Now, Pro Medicus is, I guess, having another cracking run. They continue to hit record all-time high after all-time high. So this is a healthcare company that essentially uses software, and a lot of their software is used by health companies around the world, including Novant. They're also used by several universities in the US. We've listed them there, Washington and Vermont University. So why we think you should watch Pro Medicus, maybe you want to potentially look for a pullback. I'm just saying if that's something that you want to do. Pro Medicus is actually deemed one of the most quality stocks on the ASX. And when we think about quality stocks, we're speaking about companies. I'm speaking about outside of the big banks and the mining companies. Pro Medicus is in there as one of the most quality companies. So what is a quality company? Well, they've got high repeatable cash flows locked in by contracts. And so quality companies also have got low debt in comparison to the earnings that they bring in. So when you're thinking about quality, think about some of the big banks with high repeatable cash flows from people paying mortgages and repaying loans, and think about the big miners as well, sending, I guess, precious resources to countries such as China and India. But then also don't ignore Pro Medicus. And they're some of the ASX companies that we think you should keep your eye on. Thank you, Bowen.
Thank you, Jessica. Very lovely, and thank you for helping us investing not only in United States, but in Australia. And well, in the second part, we emphasize that AI must be viewed as a global phenomenon, and we do not advise investing in the US companies exclusively. Now, let us think about AI outside the square. So, Jessica, what other companies should we watch that are leading business innovation using AI?
That's a great question. So I'm not sure if any of you are watching the Milken conference that Elon Musk headlined yesterday. I guess what's really interesting about Elon Musk, whenever he steps up on stage, he speaks a lot about space. Sure, we can't really trade that on the I guess on the New York Stock Exchange. Sure, you can if you're looking at space stocks, but I'm speaking about the mega cap companies here. So if we think about Tesla, what are they doing and how is that leading the charge in terms of innovation? Using AI. So 2 weeks ago, Tesla got the nod in China to roll out full self-driving. So they're going to be using Baidu's mapping. And by the way, Tesla has been using Baidu for years. They've been partnering for years. But China gave the nod for Tesla to roll out full self-driving in China. This is great. And this is an example of how mega cap companies that aren't necessarily in AI are integrating AI to drive change. And if we just think about AI and full self-driving, so obviously full self-driving is powered completely with AI using mapping technology from China's Baidu. So that is obviously heavily reliant on chips and some of the AI servers that we've spoken about today. But if we just think about that business alone, what I want you to think about is this. So Bloomberg, if we think about Tesla shares, I mean, we all know that they've been down and out this year. So they're down, as we put, 28%. They're now at, pardon me, sorry. They're now at, sorry for flicking. They're now at $177. But if we just think about the FSD, the full self-driving division, Bloomberg actually estimates that division alone is valued at $117. So this is, again, excluding all the other revenue makers, obviously normal Tesla EVs, obviously energy storage. So exclude that. $117 valuation as at today. So if we think about the future as well, the capabilities of FSD, I can probably hear you going, oh, well, FSD has already been around in China for some time. Yes, it has, but not with one of the world's biggest companies. Li Auto is one of the companies in China that already has FSD, but they're just one of the companies in China that have autonomous driving, by the way. But Tesla will become, I guess, the world's biggest company to roll out FSD. If we think about the future, full self-driving could account for, I've highlighted it here, 31% of this business's revenue. So although the market right now is saying, sure, Tesla shares are only expected to get back to $185 in a year, that's the average analyst estimate. But if you think about a long-term horizon, Tesla is set to, I guess, hyperscale their revenue into other areas, again, powered by AI. If we think about the other departments of Tesla as well and why else Tesla shares could do well over the long term, we do know that Tesla is a big beneficiary of the world moving to be emission free. So this is another tangent now. So if we think about EVs, sure, a lot of EV companies, their shares have underperformed this year because the market has been flooded with competition. But think about the long term. We do know, as I put on the right, you do have a lot of European companies banning the sale of new fuel-powered, countries banning the sale of engines from 2040. So you've got China, Canada, and France banning fuel-powered car sales from 2040, and you've got the Nordic countries, including Denmark and Netherlands and Sweden, as well as the UK and New Zealand, banning fuel-powered car sales, new fuel-powered car sales from 2030. It's not that long away. So this is why we're saying, sure, EV shares are on the nose now, but you need to think about the long term and potentially backing a company that resonates with your values and that can also maybe benefit from AI integration. So this is why we're saying this company might be one to watch. Another thing that's really positive for Tesla as well, and as I've put down the bottom here, we've seen some big investment banks upgrade Tesla shares this week. So we saw Morgan Stanley give Tesla a price target of $310, and we've got Piper Sandler a $205 target. But so why did Morgan Stanley upgrade Tesla with a $310 target? Well, I think it's not only based on what some of the things that we've spoken about, the AI integration, the full self-driving, obviously, that goes part and parcel with that, but also robo-taxi is expected to launch in August. And you can't launch a robo-taxi without AI. The other thing that's really compelling, a lot of analysts to get more bullish on Tesla, is that China recently, 2 days ago, they just announced that they are reviving their EV policy. And so this is a tailwind for Tesla shares, and that was another reason why Tesla shares have been picking up recently of late. Also, bottom right here, we can see Tesla shares, they've had a pretty bumpy ride from that record all-time high that they hit back in 2023. But if history repeats itself, looking at the technical indicators, if you're an analyst, you probably might see that Tesla shares could potentially rally 26% to a new high if history repeats itself, because they're oversold, and the MACD is telling us that momentum is starting to pick up. But Bowen, I might just touch on another company that is pegged to AI, and that is a healthcare company, Novo Nordisk. So I mentioned Novo Nordisk earlier on in the presentation. So Novo Nordisk, you probably know, maybe one of your friends and family is using their drug called Ozempic. Ozempic was rolled out by Novo Nordisk, and that fueled, I guess, eye-watering share price growth in Novo Nordisk shares. I've highlighted that here. Their shares are up 26%. We can see on the bottom right, their shares continue to hit new all-time high after all-time high. Their shares have pulled back a little bit, but they're starting to run up again, and they're trading above all of their moving averages, which is a bullish signal if you're into technical analysis. Let's just go back to the details of who is Novo Nordisk. So Novo Nordisk, I don't know if you remember, a couple of weeks back, Novo Nordisk announced a game changer. They are going to be building the world's supercomputer for drug discovery solely using NVIDIA's chips. So this was a huge game changer. And again, this also validates the runway for NVIDIA's earnings to also continue in the healthcare space. Let's just go back to NVIDIA, or rather to Novo Nordisk though. Novo Nordisk, they're benefiting from diabetes sadly growing. So their diabetes drug is expected to see growing demand. And as we've put here, type 2 diabetes, which is why you might be taking Novo Nordisk's drug, type 2 diabetes is expected to grow from 9% of the world's population to 11% by 2045. So Novo Nordisk is a beneficiary of that. Also, China recently gave the nod and they approved Ozempic to be rolled out only for type 2 diabetes. We also know that a lot of people around the world are using Ozempic for weight loss. So that's something to consider as well. But what is most exciting about AI and Novo Nordisk is that this is powering drug discovery. And this means that their earnings can grow as companies increasingly want to buy their drugs. We also know, as I've highlighted down below, just yesterday, in fact, Bill Gates Foundation, that's called the Gates Foundation, as well as Novo Nordisk and another company called Wellcome, they went into a collaboration to, I guess, discover new drugs as well. So you've not only got the world's biggest healthcare supercomputer being built in Denmark with NVIDIA's chips, but you've also got a brand new body that's just been established alongside Bill Gates to develop drugs as well. And again, all of this is powered by AI, or I guess the backbone of it, using AI and chips. Catalysts for Novo Nordisk, well, as we mentioned, their shares are looking particularly bullish, but if you have a look at the average analyst estimate, we've highlighted here, the average analyst is only saying that their shares could grow 5% this year. That's if you believe the 12-month price target. But as we put from a technical perspective, their shares are worth watching. And look out for their earnings release. Their earnings is coming up a little while away in August, but Novo Nordisk, very similar to NVIDIA, has got a history of delivering better than expected results and seeing share price performance the day after their results. So there are some things you should watch. I know we're almost running out of time, Bowen, but I just want to cover one more thing. And that is this. With all of this demand out there for AI, robotics, which we haven't even touched on yet, and probably won't get to, but we'll cover that in another one. But Jensen Wong did mention that robotics is coming down the track. But I guess with data centers needed to keep the lights on 24 hours, 7 days a week, so that all these companies can continue to fuel ChatGPT models and chatbots. I guess to power AI for their companies, we are seeing global uranium companies upgraded by investment banks and ratings agencies. And uranium companies have continued to hit new record high after record all-time high. I'm talking about their shares. And what is fueling this is the uranium price. Uranium is hoped to be the world's leading source of clean energy in 2050, and that's according to the EIA. In fact, if you're in the US, so you've got friends and family in the US, you might know that 1 in 3 homes in the US are actually using uranium to keep the lights on. So it's pretty extraordinary. But in 2050, the US wants to be, I guess, hopefully heavily reliant on uranium. It's not just the US, but it's Canada and Japan, as we've listed there. So why is the uranium price pushing up? Well, we spoke about demand. Demand is there for 24 hours, 7 days a week energy. We've never seen this ever before. And the fourth revolution, the demand for technology and 24/7 on tech, is putting that demand support there for the long term for clean energy. But supply is so limited. The world's biggest supplier of uranium is Afghanistan. And Gazprom is a company in the country, and Gazprom has continued to downgrade their output because they've been hit by bad weather. So there's also ESG reasons. It's hard to actually dig resources out of the ground as well. And that's another reason why supply is restricted for uranium. This dynamic is expected to remain in place until 2040. And this is not just according to our analysis, but it's according to, I guess, the average of Goldman Sachs, Moody's, and S&P. S&P Market Intelligence is the company behind, or is the intelligence, research behind S&P Dow Jones indices. So what do you watch here? We've put a couple considerations. Keep an eye on Vistra Corp, Constellation Energy, and NRG. Their shares continue to hit new all-time high. Constellation Energy we've earmarked as one to watch. Why? Well, Constellation Energy accounts for producing 10% of the US's clean grid energy. So when you turn the lights on in the US, the chances are that it might be powered by a Constellation Energy source. If you don't want to pick stocks, if that's not for you, you don't want to pick stocks and keep on track of them, that's fine. We encourage you to look at ETFs in the uranium space. The world's biggest uranium ETF, which is down the bottom right-hand side, that's a chart of the uranium ETF URA of their performance. So URA is an ETF to watch. Another one is URNM. So when you're buying these ETFs, you're getting exposure to the world's biggest uranium companies, some of which we've mentioned here. Other companies in the ETF include BHP. I'm sorry, that is a lot of information, Bowen, but I'll hand back to you.
Thank you so much. Thanks, Jess. Time flies and it almost comes to the end of our webinar, but now we will start our highly anticipated Q&A session. So if you have any questions about what we discussed today, please submit a complete question under the chat box and you will receive 100 more points. And Jess will answer as many questions as possible during our Q&A session. And Moors, pop up your questions and discussions in the chat box now. Okay, now let's head to the questions raised by Moors before the webinar first. So the first question is from the Moor Wonder. The question is, how will interest rate decisions affect AI stocks and which industry vested in AI will be most impacted? So Jessica, what's your answer about this one?
That's a great question. So we do know when we saw the market, the S&P 500 recently pull back 5%. We saw NVIDIA shares and a lot of the AI and chip leaders pull back as well. But now, since then, we've seen the Fed Chair, Jerome Powell, actually say we're not going to rise interest rates this year. More or less, that's what he said. So this is supportive of the trend continuing in AI and chip companies. Going to the second part of your question, who are the biggest beneficiaries or where will the most money be spent? I believe that was your question. As we've mentioned in our slide, we're thinking that AI, IT spending is where the most forward growth rates are. And we put in our presentation 100% compound annual growth rate of spending is expected in IT services. That includes hardware and software. And a big beneficiary of that are some of the chip makers that we've mentioned today, but also I think about cloud companies as well.
Thank you so much and hope this answer can help you. And next question is from ZNWC, our more ZNWC. So the question is, do you think Tesla is an AI tech company or only an automaker? So how do you see the outlook of Tesla in 2024?
That is a really good question. So I'm sure Elon Musk would say he's kind of a hybrid, right? He's not actually said that, I don't believe, but if you listen to his recent speeches around the world that he's given, he's more or less saying that. I guess to answer your question, you have to think about the world's biggest ETFs. And so the world's biggest ETFs in autonomous self-driving do have exposure to chip makers, but also to Tesla. And so that's telling you that the world's biggest composers of indexes, so S&P, Dow Jones indices, and MSCI, they believe that Tesla is an AI company. So the ETF that I'm speaking about is called DRIV. You can buy that through Moomoo. It's listed on the ASX and also on the New York Stock Exchange. But again, DRIV is an autonomous vehicle play or ETF, and gives you exposure to chips, but also to Tesla. Hope that answers the question.
Thank you so much. It's definitely a debatable question, especially about Tesla, and we will see how will it performs during 2024. Yeah. And the next question is from the Moomoo ID 1523859090. So the question is, will AI boom only benefit information companies, or will it also help other sectors like retail or pharmaceuticals? And why is NVIDIA in the spotlight? While its direct competitors like AMD and Intel not spoken of so much, I see a potential for them to grow too. Yeah, so that's the question. It's a little bit longer.
It's a long one, but it's a good one. So let's just start with NVIDIA. Why is everyone speaking about NVIDIA? So as we spoke about, NVIDIA is the only company that gets the majority of their revenue from the Magnificent Seven companies. So majority of their revenue, that's 40%. Second of all, NVIDIA was and is the world's leading supplier of AI chips. And so AI chips rose to, I guess, to become a mainstream name after ChatGPT. And ChatGPT would not have been developed without NVIDIA's H100 chip. So I guess Wall Street was aware of this. And then investment banks were increasingly upgrading NVIDIA. And then we saw a lot of good announcements from NVIDIA as well. So that's why I guess they rose up so much and they become the market darling. But if we can give you access to today's presentation, I hope it answers the question that NVIDIA is actually working with some of the companies that you've mentioned. So AMD, for example, as we mentioned, they partner with Taiwan Semiconductor. They partner with the HP, etc. as well. 46% of their revenue is majority from devices, but the future is in the cloud, and so generative AI is the backbone of the H100. So they're two very different companies. So when you're buying AMD, as we mentioned, you're buying a chip company that is the backbone of physical devices. Again, NVIDIA is the backbone of AI that is behind these mega hyperscalers growing their businesses. Another part of your question was, will AI help other businesses? Absolutely. Absolutely. So we've already seen some companies in Australia and the US actually cut employees and replace them with AI. We've seen Carnava do this. We've seen another company in Australia do this. So there's many companies that are cutting costs, and that obviously enables their profits to grow and their margins, earnings margins, to grow quicker. So absolutely, AI is really helping businesses. Also think about AI in what you said, retail. Absolutely. So if you think about our interactions with retail, I don't know if you shop at Woolworths or Coles. So another big driver of AI spending is in ad spending. And so we spoke about those. Remember at the beginning of the presentation, we spoke about what 100% compound annual growth rates, where are they likely to be? One of those growth rates is in ad spending. So ad spending is increasingly being integrated into platforms like Meta, but also when you do your daily shopping as well, companies like Coles and Woolworths, etc., Best Buy, Costco in the US, they're increasingly using AI and also, you guessed it, buying those chips to power AI so that they can tailor ads and also so that they can put chatbots on their business systems. So again, ad spending, chatbots, all of this is fueled by semiconductors and chips. And also think about the cloud as well. We need to store this somewhere, and data centers. The data needs to be backed up.
Thank you so much. So AI is, the great industrial trends and is stimulate our, productivity. So definitely all companies and all industries, they are trying to factor AI in their business patterns, in their themes. So yeah, and I think we can see more competition within the industry, within the business world in the future. Thank you so much. And maybe let's come to the last question. And it's from the Moomoo ID 1027-28235. So the question is, what indicators or metrics should investors monitor to gauge whether it's too late to invest in AI stocks or if there are still opportunities for growth? So what the indicators that we should monitor? Sorry, Jessica.
Sorry. So we just have to pay attention to earnings season. So we mentioned in our side, I guess it pays to, listen to what big businesses are saying. So we spoke about big tech companies. If I can share my slides again, if that's okay.
Yeah.
So we spoke about big tech companies such as Meta, Microsoft, and Amazon announcing that they're going to spend $140 billion on AI. And so this is a tailwind to watch. So I'm not sure if you can see my screen. I'm just going to try and share it now. But there are many indicators to watch as well, but that would be, I guess, one of the most significant ones. I'm hoping you can see my slides. Can you see them, Bowen?
Currently not. It doesn't work. I can just see your face.
Sorry, I'll just keep on going. But we will be sharing the slides with you after. But what I was going to show was the compound annual growth rates also tell a really interesting story of where we're likely to see the most spending. So we spoke about listening to big tech. They're saying, $140 billion is going to be spent on AI, but also thinking about further than that. So that's $140 billion this year from those companies that we've mentioned. But taking a longer term view, the compound annual growth rates for the next 10 years, the most spending, we've got to think about where does that need to go so that all these companies can roll out chatbots so that they can continue to innovate to stay competitive. So that is the 100% compound annual growth rate for the next 10 years that we mentioned. So that's AI spending going into IT services, hardware, software. Hardware, think about servers, think about chips. Software, think about cloud computing. Also, think about data centers as well. But data centers are also hardware because they're physical data centers. So data centers are, for example, Oracle in the US or NextDC in Australia, for example. I hope that really answers your question.
Thank you. Thank you so much. And thanks to Jessica for the insightful answer. And once again, thanks to our audience to their questions. So, ladies and gentlemen, that brings us to the end of today's webinar. A big thank you to Jessica for joining us and sharing your insights. Your contributions have made this event truly special. And to our wonderful audience, the Moors, thank you for your active participation and engagement throughout the event. And please follow our, thank you. And please follow our official Moomoo community account, Moomoo AU, for more exciting gatherings and fun events. And also, please follow Moomoo account Jessica Amir. We look forward to seeing you in the Moomoo community. Goodbye, everyone. Bye.
Goodbye. Thank you.